Hi there, it's Jason here. Right, so we're going to move on to double entry bookkeeping first of all. And as I said to you before, it's not essential that you follow this module. If you understand double entry, then move on to the next one, absolutely fine. You know, I'm not here to teach you to suck eggs, as I keep on saying, but I do think it's vital to understand double entry before you even move on to computerized bookkeeping systems. I think it's good to have a general grounding in it, and that's what I'm going to teach in this module. So in the first clip, I'm just going to show you briefly my preferred method of double entry. In the second clip, I'm going to go through a complete exercise. So the second clip is going to be quite long, but of course you can pause it whenever you want to if you want to work along with me. What I'll do is my workings spreadsheet I will attach to the clip so that you can use that as you work along with me, and obviously you can go totally at your own pace. And in the third clip of this module, I'm just going to touch on other accounts like accruals and prepayments. But yeah, the first clip in this module is just going to be explaining my preferred method of double entry bookkeeping. So I'm going to look away from the camera and onto the screen now. So as you can see, I've got my little schedule here, and this is all about the DEADCLIC method of double entry, which sounds horrendous, but it really isn't. DEADCLIC is the method that I've used ever since I started in double entry, when I first started learning accountancy. Now, bearing in mind, I'd already started as a bookkeeper even before I started learning double entry, and I think I said to you in the last section that basically I just wanted to learn the manual method of double entry just so that I understood it in my head, you know, and it was a good grounding in my accountancy exams as well. I think understanding double entry is absolutely vital to working in bookkeeping, and I think computers make it all too easy for us not to know this stuff, but I really think it's good to have a really good understanding of it, and hence me in this module teaching you how double entry works. So DEADCLIC is the method that we're going to use. Now DEADCLIC stands for debit, expenses, assets and drawings, and credit, liabilities, income and capital. That's what the DEADCLIC stands for. So it's really important to remember that the D of DEADCLIC is debit, and the C in DEADCLIC, the first C that is credit. So I'm just going to go through these few little notes that I've made at the top here. So DEADCLIC increases the value in your accounts. Now this is really vital to remember. Now in double entry, what double entry basically means is that for every debit entry there has to be a credit entry, and for every credit entry there has to be a debit entry. So there has to be two entries in every transaction that we enter into our books. There'll always be a debit in this section here, and there'll always be a credit in this section here. So every single transaction that we enter will have a debit side to it and a credit side to it. But this method of double entry DEADCLIC, we have to remember it increases the value in our accounts. So when we debit, we're increasing the value in the account, and when we credit, we're increasing the value in the account. So the way DEADCLIC works is it always increases the value in your accounts. If you want to decrease the value in your accounts, then we use the opposite. We'll credit these three accounts, for example, and we'll debit these three accounts. But rather than me really hit the technical side in this section, it will all become clear when I show you the worked example in the next section. So don't worry too much about that. But as I say, it's important to remember that the DEADCLIC method increases the value in your accounts. And a good way of remembering that, although a pretty awful way of remembering it, is raising the dead. So raising the dead, we always increase the value in our accounts when we use DEADCLIC. And as you can see here, to decrease the value in your accounts, you use the opposite of DEADCLIC. But as I say, what I'll do is for each of the transactions that we work through in the next section, I will apply DEADCLIC to each of those transactions just to prove that it does work. Income and expenses are profit and loss account items, and assets, liabilities, capital and drawings are all balance sheet items. So I'll just show you the DEADCLIC table here. So the dead of DEADCLIC is debit. We've got expenses, assets and drawings. So to increase the value in any of these, we use debit. Expenses affect the profit and loss account. Assets affect the balance sheet, and drawings affect the balance sheet. And assets, just a little note here, assets are what is owned by the business. So assets could be a car, could be buildings, could be fixtures and fittings, could be plant and machinery. That's all owned by the business and they're all assets. And again, as if to reiterate it one more time, it's to increase the value. So when we debit any of these three, we're increasing the value. Likewise, on the click side, that's credit, liabilities, income and capital, when we're increasing any of these accounts, we use credit. But as I say, if you're not following this 100%, don't panic, because it will all become clear, because on each transaction in the next section, I will explain the DEADCLIC methodology, I think that's right, in every single transaction that I do. Liabilities affect the balance sheet, and liabilities are owed by the business. So rather than owned, which is all your plant and machinery, etc., liabilities are owed. So they're what the business owes. So they could be a bank loan, for example. It could be a bank overdraft, or they could be capital that is owed back to the business owner. So liabilities and capital are owed by the business. Liabilities affect the balance sheet. Income affects the profit and loss. And capital affects the balance sheet. So that's a quick summary of DEADCLIC and how it works. But as I say, don't panic if you haven't understood that. Please go back and watch this video again. Hopefully it will make more sense next time. Hope so. But don't worry too much if you don't understand it. I'd still recommend you move on to the next clip, because that will be the complete worked example. It's going to be a very long clip, but don't let that put you off either, because you can pause it as you go along. But for each transaction in the next clip, I will show you how DEADCLIC applies to each of those transactions. So it's just important to remember on double entry bookkeeping that every single entry in the accounts, every transaction has two sides to it. There'll always be a debit side and there'll always be a credit side. And when we enter those transactions in the accounts, in the example next, every single one of those transactions will have two entries, and I will show you how our methodology works for each of those transactions. So that's DEADCLIC explained. As I said, I will attach the PDF to this clip so that you can download this for yourself and print it out and constantly refer to it. And in the next clip, I'm going to move through the worked example in its entirety. Quite a long clip, but bear with me because it will be worth it. We're going to look at entering lots of transactions into the business accounts in the next clip, and ultimately we will extract a trial balance as well. That's what we're aiming to do. Now, as bookkeepers, when we apply for jobs or when we get jobs, they'll often say on the job description, must be able to produce accounts to trial balance. And that is what we'll be doing in the next exercise, albeit we're doing it manually. Most of the time we'll be printing a trial balance off from our Xero or QuickBooks or whatever package we're using. But I'm just going to show you how to extract a trial balance manually. Okay, so that's all to look forward to in the next clip, so I will see you then.